Hey everybody, what's up? It is Wednesday, August 7th. I have to say the markets are very emotional these days. Very, very emotional. And there is a reason for that. And that reason has to do with monetary policy, central bank monetary policy all over the world now. I'm not just talking about the Fed, but you can look at China, you can look at Japan, you can look at the ECB. I mean, today we had a bunch of rate cuts. We had a rate cut in New Zealand. By the way, my report, Zombie Trading, had my subscribers positioned short the New Zealand dollar going into that rate decision. Okay, so we made out very, very nicely on that position. Again, the Zombie Trading is my daily Forex signal service. We know how the zombies are going to behave. They're very easy to read. I've used the analogy of the poker game where, they are so transparent and easy to read. That's like sitting at a table, a poker table, and you can literally read the hand of all your opponents. How hard do you think it would be to make money if you had that information? Obviously, it would be very easy. So that's what we do. So we were short the New Zealand dollar going into that because we knew, even if we didn't know that they were going to cut by 50 basis points. And actually in my write-up I said, I don't expect a cut. However, the language is going to be extremely dovish. They're going to have a very weak outlook. They're going to probably set the market up psychologically for a cut. It would have done the same thing. You would have had a sell-off in the New Zealand dollar. But we got a 50 basis point cut. They went down. We made money on that. Again, you can get that subscription service at my website, pitbulleconomics.com. Let's talk about the market volatility. Let's talk about monetary policy. That's what I was leading into. By the way, we had a cut in interest rates in India, a cut in interest rates in New Zealand. So that has been going on. Now, monetary policy, and it really looks to me as if these monetary authorities are in panic mode. And of course that panic, that emotion is just transmitted to the markets. And we saw this really start to develop late last year with the Fed, when the Fed was kind of reacting to criticism from Trump. It was reacting, and when I say the Fed, I think, I really should be clear that I'm talking about Jay Powell and maybe a couple of these other guys on the FOMC board, but like Neil Kashkari, who I think is always auditioning for the role of Fed chairman in front of Donald Trump. He wants it so bad. He was a failure at PIMCO. Remember, he was, what's his name, Treasury Secretary during the crash, the guy Paulson, Hank Paulson. He was his right hand. Kashkari came out, he was his protege. Then after all that, he went, he led the TARP, that whole bank bailout thing, which basically all you needed to do was just a little regulatory forbearance. I was arguing that the whole time. I said, just suspend mark-to-market accounting. You didn't have to give the banks, well, they end up giving the banks $700 billion or $800 billion. Just suspend mark-to-market accounting. All that stuff are regulated assets. The government already deems those assets as okay for the banks to own. Why? Because they are guaranteed to return their full value back. Those are almost entirely Treasury securities and stuff like that, and loans that the government allows the banks to make. All you had to do was declare forbearance, the suspend mark to market. But no, so they did this $800 billion to the bank. Anyway, Kashkari, he ran that thing. Then he went, and when everything cleared up, he went to PIMCO. He was managing a fund there. He was a disaster over there. I think he tried to run for governor of California or some political office. He didn't, nothing there, nothing. So where does he go? Of course he goes back to the Fed, and since he's been back at the Fed, he's been, pick me, auditioning for Fed chairman by constantly saying we need lower rates. Anyway, I got off track here. You could trace this back to the Fed, and then in January, where, I'll admit, in January, I should have said, hey, I'm pulling the plug on some of these trades because the Fed is pausing. In fact, they said they were going to pause at that time. But I really thought that pause would be a temporary thing, but then this all kind of reverberated throughout all these central banks in the world, and now they're in the rate cutting mode. And you see the market reaction to rate cuts. It's not happy. This is a withdrawal of income from the global economy. In many cases, these rates have plunged into negative yields, which is essentially a tax. Okay, the banks are being taxed, so that means their earnings come down, so their capacity to lend goes down. What's incredible is all these guys, many of whom are bankers themselves, not Powell, he's a securities attorney, many of whom are bankers themselves. I mean, you don't understand that when you tax the banks and they earn less money, that reduces ultimately their capital, and it is their capital which is the only constraint to their lending, not liquidity. But they keep pumping and pumping and pumping. And the pumping is no good, because when they add these trillions in reserves, what happens? Then bank leverage ratios go up. They have to have more capital, but yet they're not able to acquire more capital or allow their earnings to accrue, because the negative rates are sucking away their earnings. It's a vicious circle. Now, if we didn't have, thankfully, fiscal policy, mostly from the United States, but even Europe now is running deficits, in some cases above their target level of 3%, that's helping to float things. So, this is where we're at. Bad policy, junk policy in, bad results come out. But we're still having very supportive fiscal here in the United States. I'm not saying that's going to stay that way. And if it doesn't, I'll be the first one to say, hey, you got to ditch everything. We're coming up to the window now. If you want to know what that window is, you got to sign up for my report. Go to pitbulleconomics.com, sign up. You know, it's what I've been talking about, reserve flows. There's been a bunch of articles today in Zero Hedge. They've all been wrong. I've explained it. I sent out 1 million emails today. 1 million emails on oil, on these Zero Hedge articles, on monetary policy, on China, on you name it. I sent it all out today. So if you want those emails, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader or Zombie Trading. See everybody tomorrow.